Welcome back to another video. Welcome back to Royalty FX Academy, where we teach you how to trade step by step, trading 101. Today, we are going to cover back testing. Okay. The ends, the wins, the where, and the how, and of course, the why. Okay. So, everything we are going to cover is coming straight out of the book Success in Sight. Okay. It's a hands-on book, not a lot of reading, just ins and out on how to draw the zones, how to identify the turnaround points, drawing the trend lines, drawing the zones, identifying the highs, the lows when it comes to market structure. Now, of course, we have two of this now available on Amazon. The reason we have two is because we want to focus on one market at a time, where this one itself covers everything that you need to learn and understand about market structure. To be more specific, a bullish market, the buys, the uptrends, the higher highs and the higher lows, and the double bottoms, the breaking reaches for the buys, the Fibonacci retracement points. And of course, we do have the second one, volume 2, Success in Sight. Okay, so again, 60-day challenge. You lock in. This right here guarantee you to help you understand the ins and out when it comes to the Forex market itself. Okay. So this one right here covers everything that you need to understand about selling market structure, lower lows, lower highs, double tops, the break and retest after the double tops, understanding how to mark the zone, understand where the 50% would be, the 61% will be like on the Fibonacci. So again, it's a workbook, everything that you need to learn to understand when it comes to market structure. All right. Just drown yourself in, lock in 60 days. And I guarantee you come out on top. Okay. So with that being said, let's go ahead and get into this. Okay. So let's go ahead and go to our blackboard real quick. So we're gonna go all the way back real quick. Where we're going to cover rules first. Just like every single other videos that I do, I want to make sure that we understand we have to follow the same method every single time. So I will be repeating them over and over again until it become secondary or second nature to you. Okay. So look, rules. Since we are back testing setups, also we are covering buy-in setups. Okay. Double bottoms first, and next video we'll cover just strictly break and retest, because I don't want to overwhelm you guys when it comes to learning the buy-in market itself, the structures and the setups. So it's going to be double bottoms. But first thing first, rules. What are the rules? Okay. What kind of rules are we talking about here? The rules are pretty much when you are going to look for a buy setup, you want to go to the highest time frame. Okay. So that will be rule number one, highest time frame, which are your monthly. Okay. Starting from the highest, going down to your weekly, and then your day. So rule number one is higher time frame, weekly, monthly, daily, to identify the setup itself. That's where you will be marking your zone. Okay. Now let's jump in straight to rule number two. Right. Rule number two is the time frame itself that you are going to stay in or pull the trigger in. And that's going to be the lowest time frame you are going to use, which is the 4-hour time frame, of course. So rule number two is time frame for entry, right? Let's just do time for entry, okay? And that is the H4, right? Also known as the 4-hour time frame, okay? So on the H4, the 4-hour time frame, that's where every candle in that time frame takes exactly 4 hours to be completed, okay? Now we're gonna go straight to rule number three, okay? Rule number three is, okay, price action, right? So basically price is going to be at a level and it's going to tell you, hey, now it's time to take action. So price action is a combination of one or two or more candles combined together that indicate, hey, buyers are now in control of the market, or sellers are now in control of the market. So since we are covering double bottoms, buy setups and different variations, of course. The price action will be the engulfing bar, and to be more specific, the bullish engulfing bar. So rule number 3 is PA, okay, also known as price, okay, action. So we know it's gonna be the bullish. Ooh, it's gonna be the bullish engulfing, okay, price action. So it's gonna be bull engulfing, bullish engulfing. All right. So rule number 3, PA, aka price action. Right. Now, rule number 4, which is the last one, that will be your SL. Rule number 4 is your SL. That is your stop loss. Okay. Your SL, your stop loss. Since we are covering double bottoms or buy setups, or stop loss, of course, is going to be placed at the last low. So stop losses placed at the last low. Okay, so just like the name of it, stop loss basically means stop losing. It's something that you place. So when you take a buy in the market, hypothetically, if it happened not to go your way, you will not blow out your capitals. You pretty much will stop losing. All right, your stop loss is the amount you are willing to risk. The amount you tell yourself, hey, I'm gonna take this buy no matter what happened. All right. I'm only willing to lose. I am only willing to risk $30, $40, $100, $500, or $5,000. That way you don't lose anything past that. Okay. So you are protecting your capital. All right. You have to always use a stop loss. So that's rule number 4. All right. So we can run it. Let's run over it one more time real quick. So we are back testing. Right. And when it comes to back testing, just like we trade, we need to follow our rules. All right. So we have 4 rules. Rule number 1 is the time frame that we use to identify the setup. And that is the highest time frame, monthly, weekly, and daily. That's rule number 1. It's a must and always has to be. All right. Rule number 2, it is the time frame you are going to use to execute. The time frame you are going to use to enter the trade. That is the 4-hour time frame. Okay. You have a lot of time to take that trade. 4 hours. Okay. And rule number 3 goes hand to hand with rule number 2, because rule number 3 is the price action itself. Due to the fact that we are taking the engulfing bar, we take the bullish engulfing in the 4-hour time frame. So that means your price action will be available to you within a 4-hour period, right? So a 1 to 5, a 5 to 9, a 9 to 1. Okay, that's why again my method is 1, 5, 9. So those are the time your price action will always be available to you. Okay. And then the last one is number 4. And number 4 is your stop loss. Okay. It's the last thing you will do is place it, but it's the first thing you want to understand where it's going to go. Your stop loss is where you place your risk, meaning I'm willing to lose X amount and no matter what, and that's it, right? So you just take the trade and you done. So that's the rules. Now, now we're gonna go back just a little bit. All right. So for the back testing aspect, we're just gonna go back as far as covering the time frame. So rules are done. So now we are going to just one more time real quick, not long. So when you come to back testing, you always want to use the highest time frame to back test. All right. I'm going to try to say this as slow as possible. That way we understand what it is that I'm saying. That way it's just not just verbiage. We want to use the highest time frame simply because we want to understand the overall trend of the market. We want to understand where the market is buying or selling. We want to know if it's a bullish market and if it's a bearish market. And the best time frame to look for these structural point will be the monthly, which is the highest time frame, where you want to understand where the market is going for the whole month or for the year. Okay. And then you have the second highest, which would be the weekly time frame. Okay. So there's like 4 weeks within a month. So you can understand where the market is going for the month by just identifying the structure in the weekly time frame. Okay. Now, and then the last one will be the daily time frame. Okay. So we know that we have about 4 to 5 days when it comes to trading itself because the market closed on Friday from Sunday to Friday at 5. So you're looking at the day to understand the overall trend of the week. Okay. Now, sometimes you might get a double bottom on the monthly. Sometimes you might get the double bottom on the weekly, and sometimes you might get the double bottom on the daily. But one thing we know for a fact that's always going to happen, right? We want, well, what's always going to happen is when you look and you mark a zone in the monthly time frame, it's also going to be correlated with the week and the day. So it's going to fall in line. Okay. That's why you don't go, from day up, you will start high down. It's going to fall in line. So when you mark a zone, say the double bottom is based off the weekly, it will also correlate with the daily time frame when you drop down to the daily time frame. All right. Um, there we go. Oh, all right, cool. So yeah, so monthly, weekly, and daily. That's it. All right. Like I was saying, the last one is the daily time frame. So if you don't have any setup in the weekly, the first time frame your setup is going to be available is the daily. If you don't have anything on the daily, it will be the weekly. If you don't have anything on the weekly, it will be the month. So you take that backward, right? So you look at the bigger picture. We look at the month to see, hey, where's the next setup going to be at? Or we at a setup area? You know, where's the next zone? We are anticipating the market to either bounce off to buy. If you don't have nothing on the monthly, let's look at the weekly. Where's the next structure point based on the weekly time frame that the market might hit and then reverse at? All right. And if we don't have anything on the weekly, so we're going to go to the daily and wait for that. So you just want to be patient and wait for that. So the bigger the time frame, the bigger the play. Okay. And the more money you will make. Okay. So that's that. That's why we want to use that. So monthly, weekly, and the daily time frame. All right. So these are the setups that we are going to go over. Again, it is the double bottom setups. Now, these setups are available in the ultimate buying setup, available now in Amazon. So again, this book itself gives you the ins and out of the market, understanding when to buy is going to be available and how it's going to look like. So when it comes to back testing itself, if you just simply have this book available to you, all you got to do, right, is literally go to the page itself, right? You look at the page, you identify a setup, you know, the first setup, of course, a double bottom. You identify this in the book. And then you just take what you see in the book, you just go to the chart and identify the same type of setup. And then you will see how it would play, right? So it helps you engage and truly understand how the market moves, not just reading. So a lot of us do read. There's nothing wrong with reading, but because we read it doesn't mean that we understand it. So to help us better understand it, the pictures and the instructions are in the book that give you the step-by-step on the how to. Okay. And of course, we do have the top-down analysis, meaning that the setup start either on the weekly, daily, going to the 4 hour, or it starts on the monthly, going to the 4 hour for the price action. Okay. So let's see real quick. Hold up. Right. So look, see that? It's also fully colored, easy to see, big candles. Again, it's not a lot of reading, right? It's to show you the step by step. The zones are double bottom, right? First one, second one, we have the wick, which is the liquidity, and the exact turnaround point, the close of the candle. You know, we have daily, right? And then you go to I'll have the 4 hour on the right hand side. So daily 4 hour, weekly 4 hour, monthly 4 hour. So it's like a top down analysis. So basically, you go to your daily, boom, transition to your 4 hour. These books are now available to you on Amazon. Now,